All right, hey there. Good morning, everybody. Christopher Inks with Texas West Capital. It is just after 11 a.m. Central Standard Time here on Friday. What is it? The 14th of October. Man, we're about halfway through this month already. 2022. Hopefully, you guys are doing all right, man. I'm back from Vegas. That was interesting. I met a lot of great people. It was a good time. A lot of man. I've got to say there were a lot of really smart people out there, a lot smarter than I am when it comes to these different aspects of crypto and DeFi and NFTs and all this fun stuff. But man, so was able to go and learn a lot myself. I spoke out there as well. Did a fireside chat too. So it was a good time. Definitely glad to be back though. I like my routine, and I was sorely missing it. So I was sitting there trying to figure out why am I so tired this morning. And as I thought about it, I got in late. I think I got up to the house here at about 1:30 this morning, and then it hit me. I lost 2 hours as well coming back from Vegas. So I'm a little bit slow this morning, I think, but we'll see how we can do. How are y'all doing? Silvio, good to see you. I had a great trip. Thank you. It wasn't really a trip to Vegas. It was a trip to the Wynn Hotel, really. That's all I did while I was over there. So, yeah. Hey there. Good morning, Andrew Bennett. Good to see you, man. Chance, what's up, man? Yeah, that's the funny thing. I was meeting Scott. So, you guys know, Scott was one of the first people to join TWC back, God, I guess we're getting just over 5 years ago. And so we've been friends ever since, and we hadn't actually met in person, he lives over in Florida, I live here in Texas, and our schedules and everything, and finally got to meet and all, but didn't even get a picture. So you'll have to just, unless you saw him introduce me as I was speaking, you'll just have to take my word for it that we actually met. So yeah, it was good stuff, man. Name Mr. Wilkes, what's going on, man? Good to see you. Great stream in Vegas. Look sharp in your suit. Oh, Scott Milker seemed very busy. Yeah, I appreciate that. Thank you. Yeah, man. Scott, I'm going to tell you guys, man. Scott's a worker, guys. I'm going to tell you, I've said it before. Every time I think that I'm doing a bit, and really kind of working a bit, I think Scott, does me one up, right? So he's definitely working hard out there. I got to be honest, guys, and this isn't just because, he's a friend of mine, but I think he probably had the best lineup. If you're really interested in business, in the business side of it, in the trading side of it, in the investing side of it, I think he probably just overall had just like the best lineup. And so I believe he's going to be releasing all those, he recorded all of those chats and everything. So do yourself a favor, man. When he's playing those, go ahead and watch them. There's a lot of great information, guys, by a lot of, like I said, a lot of really smart individuals. I don't think you guys can go wrong watching them. All right. So anyway, hey, good to see y'all. Big news was Bitcoin decided to fly on the last day of the expo, right? So that was kind of crazy. But, Bitcoin wasn't alone. It was all risk-on assets. It was stocks and everything as well. Saw a lot of outside bars being printed for the dailies. Outside bar just being that the candle spread, the candle body of yesterday's candle started below and then closed above the previous days. And so we saw a lot. We saw it on Tesla. We saw it on Apple. I think... Did Netflix have? I think Netflix might have had it. Just a lot of everything, right? And so we saw this really strong reaction. And so, of course, we're going to see some pullback today. So today's the day we see, do we get the follow through? Do we get that? I think pretty much here, let me see here. There's the Fed Watch tool. Yeah, I mean, everybody's kind of betting on the fact that the Fed is going to give us a 75 basis point rate hike. Tiny little sliver, say maybe 100 basis point. I don't think 100 basis point, but I think 75 is probably where it's at. And so that'll be it. We'll see if that's it coming up. And we'll see if we can get some pullback there. Now, I don't have the chart with me at the moment. Oh, wait, maybe I do. But we'll talk about it in a minute. I was actually looking at the 30-year. And I think that 30-year is just about topped out. Yields. which means we should see a pullback, right? And that would coincide with the dollar being topped out or just about so. And, again, if the dollar's pulling back, if the dollar does pull back, whether it's today or, next week or, next month or whatever soon, right? If the dollar has topped out, we're talking about almost a 2-year run up, right? And so if it's topped out from that and it starts pulling back, then why wouldn't we think that risk on assets are going to rally? It doesn't make sense, right? Why would the dollar fall and risk on assets also fall? It doesn't normally happen like that, right? Everything kind of falls when the dollar goes up, and when the dollar comes down, everything kind of rallies, right? That's the way it is. So, this idea that Bitcoin has to go down to, 4,000 or something like that, I don't think has a whole lot of merit. I mean, technical targets, sure. But I think right now, if we're looking at bonds, if we're looking at the long bond there, and we're looking at the dollar especially, it looks a lot more like they look a lot more likely topped out for now, or just about. And then that doesn't mean we can't dip down a little bit, and we'll talk about that here. What I'm kind of looking at there, but at the end of the day, I think we're a lot. If we're not at the bottom, I think we're a heck of a lot closer to that than we are anywhere near the top. So, one of the great things that a lot of panelists were talking about at the Web3 Expo, when you're talking about investing, right? We're not talking about trading. We're talking about investing. Is this idea that you're not going to catch the bottom? Something I talk about a lot, right? Traders come in and they're trying to look to catch the bottom. Well, you're rarely going to catch the bottom, right? And what they mean by bottom is the lowest price. Well, now the bottom is actually usually a range, right? And so the idea is that, I think the consensus for most of those there talking about, investing in cryptocurrency and whatnot, is that now is probably a good time to start, if you've got a longer term mindset, right? If you're looking 5 years out, 10 years out, or whatever, this is one of the greatest times to probably get in at this point now. And what that means is not that this will necessarily be the bottom. You need that longer term time frame, right? But if you start averaging in now versus waiting, because there's a couple things here. The trip to the trip to the lowest price could be really quick, right? It could just be like a dip down right back up. And in which case, if you're waiting for that, you might not be able to get in, right? The other thing being that if it does dip down lower, it may not hit your target, right? So the idea is that you kind of dollar cost average in near the bottom, and that way you've got this you've got it close enough, right? I mean, again, this is the same thing I've talked about, guys. A couple of $1,000s lower from here is not that big a deal when you think about potentially 6-7 figures, right? How far ahead you're looking. So if you're thinking truly in terms of investing, you're not trying to catch the absolute bottom, because you realize that that's not really realistic, right? And so you'll look for just kind of getting that lower end of it. At the end of the day, like I said, it's a significant increase from here versus drop lower. At least I believe that's the way it is. I don't think we're going to zero. Again, I don't think below 10 is overly realistic at the moment. Now that could change as new information comes in, but that's part of the things of trading or investing, guys. We don't know what's going to happen for sure. You don't, and if you think you can, you're lying to yourself. So you position yourself in the best way possible, keeping in mind the risk associated with the position you're taking, and everything that's going on. So yeah, let me see here. Who else is here? Aramis, what's up? Bamboo is here. Data, what's going on, guys? Oh my gosh, always with the blue there. Diego, what's up, my man? I hope you are doing well, bud. I saw your post over there in Discord, man. I hope you're doing well. NJ Wave Rider, what's up, man? Andrew says the CPI was bad, though correct? Question mark. Where now the Fed will push for higher rates moving forward? Question mark. Isn't that bad for risk on in the near future going into Q1 in 23? Listen. So the idea, guys, is so you have, okay, the way you got to look at this is when news comes out, okay, is it bad or good news, right? That's the first part. Now, the second part is it priced in or not? And so this rally yesterday after the drop caught like everybody off guard, right? And why did it catch them off guard? Because they said, okay, bad number, 8.2. It was expected 8.1. It came at 8.2. And so it's worse than expected. So Fed's going to still be aggressive, blah, 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 right? The thing is, the market kind of, was expecting that, right? And more so, the market's pricing all this in. They're pricing in this continued Fed, what the Fed's saying, right? So they've been doing this for a while now. And so what that means is there's not going to be as much follow through if you're getting things around the area of what's expected, right? I mean, 8.2 is just over 8.1. Had we got 8.3, I forget who I was talking to this about, but yeah, had we got 8.3, then I think it would have had follow through lower. But it was only 8.2, just above the 8.1. And overall, so far CPI has peaked. So far CPI peaked a few months back, right? So we have this consistent decline, right? You guys know that, right? So we've got this kind of this coming down here, and that kind of runs in line with the idea that bond yields are topping out. As I said, we'll look at that chart here in a minute. That maybe the dollar might be topped out or topping out, right? So and then we look at technically on the charts, a lot of them oversold and whatnot. I mean, there was bound to be some sort of rally coming in, right? So it shouldn't have surprised people like it did. Again, guys, remember, at the extremes of price action, so, when you're rallying way up or when you're coming down, at the extremes, people get loudest, people get most set in their ways, right? At the tops, it's overly exuberant, it can't ever stop, it won't ever go down, blah, 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 right? Laser eyes. And as you come down, after you've come down significantly, everybody's emotional response is depressive, right? And, oh, God, it's never going to stop going down. Oh, we got to get these really low targets. Remember, guys, in 2018, at the bear market low there, remember, we were at 3,200, and I said, okay, it looks like we've got a bottom here. And everybody else was like, oh, no, $1,000, $750. Like I said, I think even somebody said $23. And they swore this was going to happen as it continued up. Remember, so we hit 4,000. And everybody's waiting for that. Oh, no, now it's definitely going to reject here and go down, below 1,000. And I was like, no, it's going to go up, right? And it went up. 6,000, it got even louder, right? Oh, no, it's definitely going to go now. It's definitely got to go down now. Remember how long that went sideways and blah, blah, blah. And I said, no, hot knife through butter, right? And what did we do? We sliced right through it. But this is the way the market tends to react. And so if you caught when I was speaking there at Web3, I was talking about social mood and about herding instinct and these things that kind of drive market participants, right? And how it's often wrong, especially at the extremes, right? And so again, we can look here, we go, okay, well, here's June 18th, right? Yeah, June 18th, swing low here, right? This now is October 14th, right? So what is that? July, August, September, October, right? Four months. 4 months sideways. Could it drop down lower? Sure it could. And again, my thought is if it does, I think we just get kind of similar to what we have here. So this one just barely broke down below the swing low here and pop and close back above it. I think we might get something like that, though, maybe break down a bit further, maybe 17.5, something like that. Not 17.5, but you break it through the 17.5, maybe getting 16.5, something like that, 16. I mean, you could even get down here at that S2 pivot on the daily, at 15.5 just about, right? But my thought is if it's going to break down with the market as bearish as it is, the market participants as bearish as they are, it seems to suggest that you would probably get something like that would trap those breakout traders. Everybody's waiting for it to break down, right? That's what happened here. And you short squeezed it up, right? This is what happened here. Everybody's waiting for the breakdown here. And they got it, they all went short and boom, pop, right back up, right? I think we get the same thing here. Now, I could be wrong on that. And if I am, again, my idea is this is 3, this is 4. And based on the height of wave 4 here, the target would be this 14,000 area, okay? So this is what I'm saying. But until it does, I mean, even if we're looking at where we're at right now, I mean, if I look at this, I can go, okay, well, here's A, here's B as a triangle, here's C. So there's 1, 2, right? And then A, B, C is 3. And then this becomes 4. and then A, B, and we get a C for a 5. And we can get this ending diagonal that carries us, doesn't even go that low, just goes right over here, right? Now, in terms of this structure here, again, you've got, so as we kind of going through this, right, you've got price just kind of coming down, and then you have this volume here that clicks on, of course, this support area, right? So coming through the support area, that's where you want that volume to come in, right? So you can get breakdown. Breaks down, rejected, comes down further, right? Again, volume kicking in this area on the rally back up to the support, sends it back down again, right? Now, what happens here, this is what's interesting, okay? So you've got this decline, right? Now, first of all, notice your candle spreads are getting smaller, right? And your volume is basically tapering off as well, right? I think this is slightly more volume than here, but nonetheless, around the same. And you get into the bottom here, and again, so your volume's kind of falling off. You don't see this expansion in volume and this expansion in candle spread as you're coming down. Okay, so when you're looking at distribution, as far as a trend goes, rather than a pullback, usually what you expect to see is volume rallying. You see volume doing something like this, right? And you see your candle spreads getting larger, right? So you're seeing more effort being expanded and greater result coming out of it, okay? But we don't have that here. We have candle spreads getting smaller and volume kind of dropping off as well. And then in this area right here, we have volume picking up overall. And so it seems to be potentially a sort of base building going on here, okay? Now, if we look at this, we could suggest, maybe we've got an Adam and Eve double bottom, right? But we would need a breakout above this swing high up here at 25, almost 215, 25, 214 and a half or so. We'd need a breakout above that to confirm that as such. But I'm watching it, right? I'm watching it because we do have all this volume picking up in here, and it's not breaking down yet, right? Now, that doesn't mean it can't break down. Don't mistake what I'm saying here, but the fact that it hasn't is interesting. It's worth paying attention to. So this is what I'm kind of watching. So what am I watching here? Well, what I want to see is I want to see an impulsive breakout above this area. You see we've got all this this resistance, right? So we've got this descending resistance here. We've got the daily pivot resistance. We've got the range resistance, local range resistance. And we've got this swing high resistance at 2479 and a half almost. This area right here, if we can get an impulsive breakout around that, things start to get interesting then, okay? And we look for an initial target of the range resistance here, right around that 21,950 or so level. But more likely than not, it'll continue to maybe wick up into this, maybe up to the EQ here at around 22,575. So this is what I'm looking for at the moment, okay? If I see that, then I start leaning, more bullish on the price action here. Once through this blue supply structure here, we want to look at this purple supply structure up here. And here's my thing. If we break out impulsively through here, we're likely to get this. And if we get this, we're likely to get this. And if we get this, we're probably breaking out higher. Okay? So this is the key area right here. This is what we're watching to see if we get that breakout and that rally up higher. You can see that we do have bullish divergence, right? Kind of coming off this area here. Well, maybe not even so much anymore. No, it's a little bit prior. Let me see. That swing low is actually this elbow up over here. So I wouldn't even look at that anymore. Never mind. But what we do have, though, is we do have this momentum continuing to exert itself, upward. And we see the price action here following with it, other than this quick dip and back up, okay? We've got a bullish cross down here and a breakout of oversold. And so on the daily, it looks good for a setup to potentially break up higher, but we need it to happen. Until it happens, we're just kind of sitting here, we want to see, right? Let me see here. Andrew, what's up, man? He says, oh, okay, yeah, that was a CPI thing. Yeah. So, again, going back to what, with the Fed there and everything in the markets, I can't say that it doesn't matter that it would be bad if, that it would be bad, the numbers that come out. But if the markets price them in, then they're not going to have the effect that you would expect them to have. Just because they're bad doesn't mean the market moves a lot, right? As shown yesterday, of course, and like I said, man, that rally up there caught everybody off guard, right? So now we want to see, do we get some follow through higher? Now, we're going to take a look at the stock indexes here in a bit, and you'll see that on that, again, potentially just an ABC coming off the top. Now, remember, when it comes to this, if we look at the totality of what I talk about, right? So I look at the idea that quite possibly the dollar is topped out or very nearly so. I look at the fact that the stock index is just kind of rolled over at the beginning of the year, end of last year, right? They didn't actually blow off top, which is what we would expect on a grand super cycle, right? Because the idea is that you've got a fifth wave of a fifth wave of a fifth wave, right? So it should be a lot of exuberance, and we didn't see that, which has me questioning the idea that maybe that top may not be in. And if the dollar's topped out, well, again, then what reason do risk-on assets have to continue lower? It doesn't usually happen that way, right? So, and of course, I've thought for a while, you guys have heard me talking about that Bitcoin still has, at least one more push up higher, right? The idea being that we either have a fifth wave or the rally up. Man, here's the thing, guys. It's possible that the rally up, okay, listen to me, the rally up from 2018 bear market low was just wave 1 of 5. Let that blow your mind for a bit. So, significantly higher up there, right? But at least a fifth wave up. And that would, again, align with the idea that the dollar's topping out, the bond yields are topping out. The stock market didn't have that blow off top we were kind of looking for. We would normally expect. Now, again, I'm not saying that it has to, but when you're trading, you have to look at the odds, right? What usually happens? I'm telling you guys, the best way you can trade is to find out, to understand, become a student of the market, understand what you normally expect in certain areas, right? And if you don't get that, then it doesn't mean that a certain thing is not happening, but it means that you should be letting the market show you then at that point. It's the onus is on the markets to show you that that's what's going to happen, because it's not doing what it normally does at that point. Okay? You don't be a contrarian in the market just to be a contrarian. All right? That'll get you lost money quick. All right? Let me see here. So with Adam and Eve, we're seeing a rounding bottom here on the daily Bitcoin. Yeah, I don't know that I would really call it a rounding bottom, because you've got this low over here, So the low end is the previous coming in. But yeah, potentially Adam sharp bottom here, and then Eve rounded bottom right here. Maybe that's what you meant right there, right? Yeah. So yeah, quite potentially. By the way, if that's the case, let me show you real quick, guys. I think I've done this before, but let me see here. If it is, you can get a pattern-based target here. Gosh, dog it. Let me go here. Can't grab it. All right. So there we go. All right. So now, we look at that pattern-based target up here, what, 35,620 or so? So we'll go ahead and leave that in there. Yeah. And so, if we can get that breakout, and we should expect an impulsive breakout above this swing high here, then pattern-based target gives us that up there. And I'm going to tell you what right now, guys, if you're still holding on, and we're breaking out above this swing high up here at around 32,240 or so, at that point, you should be, on the side of the bullishness. I think once you break above that, there's no real, likelihood that price is going to break down below the swing low there. So, feel free to wait if that's your thing. Again, you guys know where I've bought in, and and as we rally up to certain levels here, I plan to buy more. But, again, the idea is that, okay, if we do break down, potentially ending diagonal here, so maybe just a little bit dip below. If we continue further, I'm looking at that S2 pivot here on the daily, right around that 15.5 area. And if we continue on going below that, based on the structure here, if this is going to be a 3 and this is a 4, based on that height, 14,000 is the target. So, I'm not really seriously considering anything lower than that at the moment. That doesn't mean it can't happen. It doesn't mean it won't happen. It just means that for me, to get, it's really got to prove itself to get below that 14. But again, when I look at this, and if we look at the market participants and their overall attitude and expectations, it continues to look like I think there's a really good chance the bottom was over here in June. We may not even get a dip below. But even if we do, again, it's just another opportunity to buy a bit lower, add to that position back up, right? Now, the thing is, you don't want to be, when I talked about DCA and down here, right, maybe you do it here, maybe on a breakdown at the S2, maybe 14,000 kind of thing. You're not doing that leveraged, okay? Because you don't want it to continue going down there and liquidating you before it rallies back up, right? So just keep that in mind. Don't think you're going to go in hog wild with your leverage and full position size and whatever. You're not doing it correctly then, okay? Let me see here. Blaze, what's up, buddy? Hope you're doing well. The Woodsman, what's going on? Yes, we're going to look at the DXY chart. Sure. So anyway, yeah, there's my key level. I'm looking for an impulsive breakout. Impulsive breakout means large candle spread, large volume coming out through that, okay? If we can get that, and then we continue to use this area as support. So if we break out, the expectation would be we'd break out, rally up here, pull back to this area, and then break out higher. And if we can do that, if this holds as support, just gives you more confidence in the idea that, that we're going to rally up at least to the purple area. Again, we break out through there. You should be looking up here at 30, 31,000. Breaking out through that gives us that double bottom target up there, 35, 620 or so. And, if we're up there and you guys are still feeling bearish, you're not doing it right, okay? Yeah, so here we go. The DXY. So, again, possibly topped out here. We had this, this was yesterday, right? I got to get my days right here. All right, yeah, so here's yesterday. So again, we had the initial pop off that CPI, right? Absolutely no follow through. Not only did we get no follow through, but we broke down below that breakout. Okay? So if I'm looking at this, it looks like we got 1, 2, 3, 4, 5. It looks like we might have an A, B, and getting a ending diagonal here for C. Now, if we do, it could potentially rally up here to this purple supply structure EQ, which is just prior to the R1 pivot on the hourly, right? But it's pretty close to a 90%. But, at the lows here is where all that resistance begins. So we may just get that 78.6 there. But I leave it open for the possibility we could hit, maybe on a little bit of a wick, hit that R1 pivot there. So what am I looking for? Again, potentially 1, 2, maybe we get like a 3, 4, and a 5 as an ending diagonal. We're looking for a breakdown below wave circle B here at 112.387. If we can get that, that's going to add confidence to the count, and all of a sudden we're going to look lower. We're going to look lower. That's all there is to it, guys. And if we're breaking down here, again, there's no reason, or little to no reason why the risk-on assets, Bitcoin, cryptos, stocks, shouldn't be rallying. Okay? So this is what we're going to watch. Now, if we break out above the swing high here, this wave 2 swing high here at 113.92, well, okay then. So at that point, wave 2 is still in progress here. And we can look up here around 114, 155. If we break out above the swing high up over here, this where I'm looking at potentially the end, right? Now I'm looking here and it looks like we've got 5 down. It looks like we've got an ABC up. Okay. So again, if we break out above this swing high here, I think, there's a good chance we may hit this weekly R5 pivot here right around 115.87. And if we continue up through there, 117.746, basically 0.75, is my other target. Right now, it doesn't seem like that's likely. As likely, it seems more likely that it's going to come down. So, but we got to see what happens, guys. Right now, there's your resistance right there at 113.92. As long as we remain below that and then break down below 112.387 here, we should be looking lower. And in that case, it just kind of depends on how far it goes. But let's say we only get that 78.6 there at the bottom of that purple supply structure. Then we get a wave 3 about 110.707, and it makes sense. It's right there at that wave B support. And so again, if we're breaking down, even just slightly dipping below that wave B, then if this count's correct, that means 1, 2 is likely correct, and 3 is in progress. And 3 then has a minimum expected target of, let's see here. Wave 3 of minimum expected target down there of 106.296. All right. If we're getting that, guys, that top should be in, and we should be looking mid-90s minimum. Mid-90s minimum. Okay. On the pullback. Remember, this thing has been rallying since I called that bottom almost 2 years ago, right? January of 2021. We're just a few months off a 2-year run. Okay. Remember, oil did the same thing. Remember, oil 2-year run. Off that April, May, whatever it was, negative swing low, right? Things don't go up forever, right? They have to pull back. And so, when you think about 5 waves up off those lows, a couple of years, your pullback's going to be a little bit. It's going to be months in the making, right? At least, right? So, yeah. We're going to watch now and see if we can get the breakdown, which opens up then the breakdown here, which then opens up, the lower target there and the likelihood that we are topped out and heading down. By the way, again, guys, remember, we topped out at that supply structure EQ. And that's what I talked about way back in January of 2021 when we were looking at targets. Remember, we said, well, if this is it, we could potentially see it rallying up to that EQ. And so that's where we are. We'll see if it holds now, right? Navlusian, what's up, man? Good to see you. Let's see here. Andrew Bennett says, on a side note, maybe something to look at later on stream, the SPY printing a nice bull div on the weekly. Yeah, we're going to look at the stock market here in a minute as well. So, yeah, again, guys, I think more or less, here's what you need to look at. I continue to say this, right? If you want to know how to trade the other markets, just look and see what the dollar is doing, okay? If the dollar continues to make new highs, then the likelihood is that the risk on assets are going to continue to make new lows until they aren't anymore, right? But if the dollar is topped out, if the dollar continues to come down, then you should be looking to deploy capital in your risk on assets, okay? At least while it continues to go down. I hope that makes sense. The last thing you want to do is the thing that most people do is they get scared at the bottoms. We don't, especially as retail traders, we don't buy where we should be buying, right? We don't sell where we should be selling, right? We end up buying when we're all excited at the tops, right? And then we don't buy at the bottoms when we're scared. And if we were rational creatures, which we really are, but we just get emotional in markets, in the financial markets, right? But if we were rational in the financial markets, guys, we would be buying when we're scared down there at those lows rather than at the very tops when everybody's overly excited, right? We'd be selling into strength. That's the key, guys. You want to sell into strength. You want to make sure that you can get out with your profit, right? And you want to be able to buy in these lows. I see people all the time. I've got friends in the music industry, right? And great people, man. Some great bands, some great singers. And the common theme among them is people, when they finally hear of them, they go, oh, man, look at you. You're an overnight success, right? They're like, yeah, overnight success over the last 10 years, right? But people, that want to do these things, oh, man, you're so lucky. You're an overnight success, whatever, right? But they're not really an overnight success. They've been working hard, doing the things they got to do that the others weren't willing to do at the time, right? It's the same thing in trading. people are often, oh man, you were so lucky you caught the bottom. Oh man, you're so lucky you bought in there. Oh man, you're so. But it's not that somebody's lucky they're doing it. It's just that they're doing the things that they need to do, right? Now again, this isn't me telling you you should be buying or you should be selling or whatever right now. I'm just saying when you think about the markets, understand the psychology of what's going on. Understand that markets are not rational. Efficient market hypotheses is BS. Random walk in the market is BS, guys. Because the market is driven by you, me, and everybody else, and we're driven by emotion, and it's predictable. Now, does that mean we're always going to get it right? No, because there's still analysis, and when we do the analysis, we're still led, even me doing this for as long as I have been, still led by our emotional, our biases, stuff like that, right? But it doesn't mean that just because we didn't read it correctly, that it doesn't work, that this idea of how people move and herds and whatnot doesn't work, right? So, I think, again, that there's a good chance that the dollar may be topped out or very close to it, and that Bitcoin may be bottomed or very close to it. And if you have a 5 or 10 year time frame, I would think it makes sense, to DCA, in this area. Again, the idea that you go down, I don't know, $5,000 from here or something. I mean, when you look at that, and the upside is, 200,000, 500,000, a million, if you think is where it's going. I mean, $5,000 isn't really a big deal, guys, right? Stop trying to be so perfect and get everything's exact and just get in and do something, right? Let's see here. If we get a crypto bull run, is it possible to expand all the way to 2024 or even longer? Yeah, sure. I think so. Again, the idea is, let's jump back here real quick. What's up, Henk? I see you checking in, bud. So here's the thing, guys. So the idea is this is 3, this is 4, right? And then this is 1, 2. And it's potentially, this is 3 with an ABC, right? Or this is 3 with a WXY, right? And then and this would be 4. There'd be 3 up here. This would be 4. And then we'd have 5 up, right? The other possibility, of course, is this is 1, 2, 3, 4, 5. It gives you a 1, right? I'm sorry. It gives you a 5 of 1, right? 1 from the beginning, from 2010 up, right? But what if, this is what I was talking about at the beginning, what if this is 3 and this is 4, what if this is only 1, 2, or 1, 2 of 5? This is the reality I'm talking about. This is what I've said. I said this a few months back as well. You guys might remember that, right? I said, what if this is only wave 1 of 5? And so if we think in terms of what's going on financially, right, economically, let's say the Fed goes in there and they start flooding the market with dollars, right? And so that's good for risk on assets, right? But we're at where we're at already. And so you get this significant influx of dollars and the markets go up. And so you end up seeing what becomes 5 waves up, right? With the same sort of, blow off top that we're used to on a greater magnitude, right? And of course you get the same thing with the stocks and everything else. And then you get into your big correction, right? I mean, doesn't that seem much more likely that you have this strong blow off, whether it's stocks or whether it's crypto or whatever, if you're coming into a strong recession or worse yet, depression? You're usually going to have that big blow off, right? Because that's what leads to it, right? So again, we're making a lot of speculation here, but at the end of the day, these are things to watch. Now, what I find compelling on the monthly here with Bitcoin, I think I've talked to you guys about this before, is if we look at these previous 2 months, right? Look at the big volume, big candle spread, right? But look at last month, even bigger volume, and look at how small that candle spread is. So this candle spread, if we look right up here, when I mouse over it, it'll tell you $3,259. That's the size of that candle body there, right? $3,259. This one, $622. Greater effort, more volume coming in, significantly less results. Bottom things, right? Now we need to see follow through higher. That's what we're looking for now. But this, again, when people look at volume and volume, they rarely understand how to look at volume and price action correctly, right? This doesn't guarantee that we break up, but if you are seeing this right here at the bottom here, as we're printing, higher lows basically off the swing low here on greater volume, I mean, you can look right here, right? Look at this volume compared to this volume. The candle spread here is $11,798.50. Again, this one's only $622. But you had greater volume than here, and you had a higher low. If now you see it, right? So if you're seeing this now and it doesn't give you pause, if it doesn't make you go, you know what, maybe, then you're not doing it right. Now, again, you still need to see follow through, but there's your setup for a potential rally. There's your setup for a potential bottom being in. Doesn't guarantee it, but you've absolutely got to pay attention right now. But most people are emotional, right? Most people are very emotional, very stuck on there. It's got to go down to these targets I have in my head. Again, a lot of these targets that you're seeing, crypto Twitter, whatnot, are technical targets. If there was a breakdown, it could go there, technically. Based on structure and things, that we're looking at. But that doesn't mean it has to. And this is the thing I keep telling you guys, right? This is why we called the top up here. And immediately, we're within $200 of this low right here. You guys may remember that, right? And then I was the guy that came off with the Wyckoff here and said this might be a bottom. But again, we needed to see follow through. And if we didn't, we were looking down here, around that 3,200 area, right? Again, there we were at 3128. Started rallying up a bit. I said, looks like probably got a bottom there. And we got it. Again, rallied, right? We gave you this target here, right? Publicly, right? We gave you that target. We got it. Down here with Discord on this drop, I was live in Discord talking about it. We hit about 4,600. I said, okay, looks like the bottom's in. Was that the very bottom? No. But enough had happened on that push up that made it appear that it was, right? Up here. Again, talked about laser eyes, said it doesn't have to be the top, but it's probably a top. And it was. Our target was down here, right? Again, that's where we got. So, I mean, again, I've got a good track record. You guys know, so do this live, right? Now, some people come in and they don't understand how to listen, right? And I don't mean that to be disrespectful. I just mean a lot of us, we think we're listening and all we're doing is hearing, right? So I don't guarantee tops, bottoms, whatever, but I say, listen, it looks like this. Here's my reasons why we need to do this now. But if we do this other thing, then it's not. Okay? That's how you trade, guys. If you want to make money, that's how you trade. If you want to lose money, you guarantee, you stick to it no matter what. You don't change when new information comes in. Now, again, yes, in this area, I thought, okay, maybe we might have a flat correction here, right? So we might get up here and then break down here and then go up, right? But again, all people heard was, oh, it had to stop here, right? Flat correction, definitely. And I said, no, it has to go through, this level on the breakdown. And until it does, it can go up. And I said, once we hit 30,000 or whatever, I said, that's too high. I said, at that point, it's definitely not happening. But most people don't hear that, right? Most people just hear, oh, we're going to reverse here to go down here. To be good traders, you have to be good listeners. And I think just to be good at anything in life, you have to actually seek to understand, to listen, not just hear. Okay? So here we are, and things so far are doing kind of what we expected. Now, in the shorter time frame, it's always the shorter your time frame, the more risk you're taking on, all right? It's harder. You're going to be wrong more often. But nonetheless, we still always talk about, listen, it looks like it's this, but in order to confirm that, we need to break out through this, right? And if it goes this other way, through this other level, then it's invalidated. This is trading. Trading, you say, listen, I've got a validation level. I've got an invalidation level. Now, these things don't mean that you're definitely going to be correct if it goes through your validation level, but what it means is you become more correct. And if it goes through your invalidation level, it means you become less correct. So if you start thinking of trading as this fluid thing, right, then you set yourself up for actually a lot more success, because it forces you to use risk management. And if you're using risk management, well, the hell, then you want to use proper risk management, right? Increases your odds, guys. Let me see here. Bamboo says Elliott Wave International also has Bitcoin on the monthly, making a Wave 5. In the process of it? Yeah. I mean, it makes sense, you know. Again, I think I'd be surprised if they had anything like significantly lower at the moment, just because of the structure here. I mean, you know, when you're doing Elliott Wave, right, and you have a downtrend or an uptrend, right, and you're at the top or the bottom of that, and you see a lot of this overlap, you should immediately default to the idea that it's probably a diagonal. So I would assume that's probably what they're talking about, right? Maybe something similar to what I was looking at here, maybe like a 1, 2, 3, 4, and then a 5 with the dip below. Because again, you've just got, you're coming down, you've got this long decline, right? And then you've just got a lot of overlap here. So yeah. Now again, that doesn't mean that's what it has to be. Could be wave 1 of 5 going down, right? Again, 3, 4, and then this becomes wave 1 as a leading diagonal of 5 down, right? But again, when you're doing Elliott Wave, you usually, you know, measure off your wave 4, right? Just a quick tip here, guys. If you're doing Elliott Wave and you think you've got a wave 4, measure it off. Your 1618 becomes your target. That's usually that's your initial wave 5 target. It's right here. So the idea that this would be a leading diagonal of a 1, wave 1 of 5, doesn't make a whole lot of sense, because it couldn't be a full diagonal then. Because this would have to be an ending diagonal, which means it'd have to be 3, A, B, C. And right here, if we're looking at this, we're going 1, 2, 3, 4, 5, right? So the idea that this would be a leading diagonal doesn't make a whole lot of sense, unless wave 5 were to push below, and it could push below 14,000. But again, with Elliott Wave, we have these targets. Wave 3, we look at the 1.618 extension, right? Wave 4, we look for a pullback, 38.2 and then 50, right? Wave 5, we get an easy target off the measurement, the 1618 extension of the of wave 4. So, these are just, targets, initial targets, because that's where price hits most of the time. So, again, when you're looking at it, it's nothing that we just pull out of the rear end. There's reasons for this, right? So, yeah, we'll see. Let me see here. Let's see. Let me kind of just looking at you here real quick here. GT, what's going on, man? Checking in from Washington. Diego says Ethereum USD has a much clearer account, in my opinion. I prefer following that these days. Yeah. And that's another great thing, guys. So there's another tip. When you're in the markets and you have those market leaders, that often, kind of crowd around each other, right? If you don't have a clear account on one, you can usually shift to another one that maybe has a clear account. Again, in this case, Ethereum. Because Ethereum had that harsher rally coming off, than Bitcoin did off that, off the low. And so Bitcoin's been really just kind of a lot of overlap here, right? Look at this, a lot of overlap on the up, a lot of overlap on the way down. But Ethereum's got a clear account, and Ethereum and Bitcoin are generally going to go in the same direction at more or less at the same time, right? So yeah, you can definitely do that. Check on with it. By the way, here, let me just jump in here real quick, the low time frame here, guys. Let me see here. All right. So what I'm looking at here, guys, look at this. Check this out. It looks like, I don't know why that jumped all the way down there. Looks like we got a 1, 2, and then a 1, 2, 3, 4, 5 gives us 3, 4 is a triangle, 5 up, 1, 2, 3, 4, 5, ABC, 1, 2, 3, 4. And it looks like we're getting 5, right? 38.2 retracement right around the wave 4 support, which again, well, I don't know why my wave 2 is over there, is usually where we're looking for it, okay? Now, if we continue to break down, we're kind of you're catching a bid right now, right? By the way, notice where we're catching that bid. I keep telling you guys, always look left, you know? Look at this. Makes sense, right? Makes sense. You're going to catch a bid right around where the previous resistance was. If it does continue to come down lower, we're looking around that 50% area. It's about 19,000, 19,020, something like that. High volume node, the EQ of this local range. It's also, if you jump in here to the 15-minute, it's the pivot, right? So look. Again, guys, I talk to you about trading pivots all the time. We rallied in sideways between the pivot and the R1, rallied up to the R1, pulling back down toward the pivot. If we can catch a bid here and break out above that, we should continue up. Should be bullish for higher. And so this, this is just the kind of setup we look for. It happens to align with, again, with what we're looking at here in terms of Elliott wave count, right? So what are we looking for? Well, again, if we're looking at Elliott wave, we're looking to break out above wave B here at 19,856.57. Now, if we get that move down to the 50% level, that gives us a minimum expected wave 3 up here at 21,963. Why is that interesting? Because if we do that, anybody guess where that wave 5 is going to be? Anybody? Bueller? Look at that. Right there at the EQ of that blue supply structure. So yeah, I'm looking for it potentially to continue on down there a bit further. At that point, RSI should be broken down and oversold here. And so again, wave 5 gives us minimum expected target around 22,652 or so, which puts us right around the EQ of that supply structure. You can see here that we had strong volume coming on, not at the top, right? Look. Volume's way down here, right at the top. It's a little bit of spike off of what we had here, a little bit more, and then they had to send in a whole ton of volume just to get the breakdown through this level, right into here. Look what happened since then. Volume's dropping off, candle spread's getting smaller. It's like they puked up what they had in terms of in terms of supply. Didn't leave a whole much further. So we'll see. We'll see either it's here or potentially down a little bit lower. We'll look for the breakout higher. And even if you don't think that the bottom's in, this at least gives you, maybe you rally up a bit further before it comes down, right? Maybe you look at ABC and you just go up a bit further. I mean, it gives you upside targets, guys. Here's the thing. Too many of y'all sit there and you're waiting on the bottom, waiting on the bottom, waiting on the bottom. You have no clue when the bottom's in as it is. Price rallies up. It's up 100%, 200% more before you actually jump in because you're too scared, too unsure at that point. Listen, guys, stop worrying about where the exact bottom is and trade. Take advantage of these opportunities to trade. Make your money. Otherwise, you're going to be stuck there the way I've described it so many times before, that psychology of what happens with traders. And you don't end up getting in until it's like 200-300% higher. And then you're kicking yourself, oh man, I should have got in down there. As long as you've got proper risk management, guys, everything's all right. But that's the problem, right? Most traders don't get in with the proper risk management. They just kind of go all in, highly leveraged, on a gut, right? A gut, idea that maybe that bottom's there or that top's there or whatever they're doing, right? Why would you do that? Setting yourself up to lose money. Stop. Stop doing that to yourselves. Let me see here. Kind of catch up with you guys. GT says nothing like a good pivot with volume profile supporting it. Yeah. Definitely. It was good volume for sure. Andrew Bennett says awesome oscillator. Has a nice bull div printed on the daily for Bitcoin. Let me see here. Okay, so that was that and that. Let's see, where are we at here? I told you guys I wanted to show you that 30-year, right? Let me see here. Okay, let me go ahead and do this. I don't know. Do I have it? Nope, not what I'm looking for. Nope, not what I'm looking for. I don't remember what I saved it in. Okay, so we're going to do it freehand, guys, all right? Let's just make a copy of this right here. We'll just do this, all right, guys? Let me see if I can find that again. Oh my gosh, what did I do with it? Lord have mercy. Whoops. Oh, that's why I hit the wrong one. All right, let's try again. Let's check and see if this is the one I'm looking for. Zoom on out here. All right, so this is something we've talked about before, right? So we've talked about the idea that we've got the breakout of this downtrend here, right? So we've got this kind of downtrend thing going from back here in 87, okay? So 87, right? So 97, 07, 17, right? With 30, 35, almost 36 years, right? Get this breakout here. Now, when I look at this, let me see, is the weekly better? See the weekly where I'm looking? Let's see. Yeah. So I think if I was looking at this, by the way, notice we're right here at the R5 pivot. Remember, guys, when we talk about pivots, especially on these larger time frames, usually that R5, right? So basically, we're looking at a 1-2 here. We don't have this chart. I don't know what I did with it. But we're going to write it up here anyway, okay? All right. And then we've got 1, 2. See if I can do this again. There we go. So basically, this is what I'm looking at in terms of yields on the long bond here, right? 30 years. Hitting that R5 pivot. Here we go. Right now, again, it kind of came in, broke out above the pivot right as it started there with the weekly, right? Tested pivot as support, rallied to R1, pulled back into this congestion here, this base at the pivot, broke out. Pull back the R1, broke out, test the R2, up to the R3, pull back the R2, halfway up, pull back the R2, boom, here we go, right? Actually, I think this is what it was, because it should be 3 down, 3 up, and then 1, 2, 3, 4, 5. So like a flat correction here. Maybe. See here. No, actually, I think that's right. Okay. Nonetheless, though, again, I was talking to you earlier about the idea that maybe that dollar's topped out, maybe yields topped out. So we'll look for a rejection. We'll look for it to pull back, right? So look for that breakdown there. Look for the breakdown. Again, just kind of looking at it, counting it up. Whether you count it and you're getting 5 waves up, or you're looking at pivots and you're at the R5 pivot, whatever it happens to be, it looks like it can be done. Well overbought here on the weekly RSI, Stoke RSI, trying to curl back down, break down, bearish cross, right? Even on that monthly, we're way up here, right? Look at that. So again, more reason why potentially we may be looking at a reversal coming in, contrary to what everybody wants to think, what everybody wants to believe, right? Contrary to what the Fed says. So yeah. Let me kind of see here. What else we got? We've got, let's look at the, Let's look at E-Minis. S&P E-Minis, right? So, again, I look at the idea that what if, this is something I've been floating around for a bit, right? Again, we've got a rounded top here rather than a blow off. And that's my kind of, again, a lot of what I look at in terms of overall market direction is sentiment, is mood as shown on the charts, right? And this is not a blow off. This is just kind of like a rounded top here. And so, again, the thing is, when you're looking at, potentially a grand super cycle top, you expect a blow off. You expect, again, a fifth of a fifth of a fifth, kind of wave thing. You expect over exuberance in the market. And I don't see that here. And so what if this, I've got this as a 1, 2 and working on a 3, right? And it could be, if we get a breakdown here, continue on, well, okay, probably looking at that. But what if this is just an ABC? A lot of people are going to get caught thinking it's got to continue going down lower, right? So we're kind of hit this area here where we had resistance and then we broke out and found it as support, created a base here, right? And that's kind of where we're at the moment, right? Kind of this area. So, just keeping my mind open as we watch this. But, again, we do see the same thing that we saw in Bitcoin, which is this momentum kind of picking up, right? As we're getting down into this area. But so what do we need? I mean, big picture here, guys. You need a breakout above this swing high here. What is this? 38.20? You want an impulsive breakout above that. That's your first thing. If you're not getting that, this means nothing. Okay? Got to have an impulsive breakout there. But I think, that if you didn't buy in here and you're waiting for, something more, right? I think you look for that impulsive breakout there. Expansion of volume and candle spread, right? I mean, that's just the very first thing you do. And then you need a breakout above this one right here. This 43.27 and a half. The breakout above that adds confidence to the idea that this is potentially an ABC, right? Because as you can see here, 1, 2, 3, 4, 5 is what it looks like, right? And of course we have our 1, 2, 3, 4, 5 as a leading diagonal here. So this could just be 1, 2, 1, 2, right? If we get the breakout higher here. But if you break out above this level, this is no longer a 1, 2 here. Unless somehow this is an ABC or WXY. I'm not sure that fits though. 1, 2, 3, 4, 5 gives us 1, 2. 1, 2, 3, 4, 5 gives us 3, 4. 1, 2, 3, 4, 5, right? It looks like 5 down. This one looks like 1, 2, 3, 4, 5 is a leading diagonal, right? So we keep the count we've got on here, kind of looking at it, right? With the idea that this could just be a 1, 2, 1, 2. But again, you're looking locally here. And if you're looking to invest, guys, if you're looking to invest, again, same thing I said with Bitcoin, you DCA in around those bottomish looking areas, right? If you think that there's a potential that this may be an ABC here, you kind of get in, right? So if you haven't already got in, maybe you put your first bid in around that, a breakout above that 38.20 area, right? Impulsive breakout. You want to see an impulsive breakout. Maybe you add more up here on the breakout above this wave 2 here. You can add more on the breakout above the swing high, right? It's better than sitting down here waiting for it to come back at you and it continues to break up higher, because as it continues to break up, you're going to become more and more unsure. And your stop loss gets further and further away, which means smaller and smaller position, right? So just an idea, as we look at it there, what we might be looking at, right? If we zoom in here to the 1 hour, it does look like a 1 and then an ABC down, ABC up. The idea that this right here is ABC up and breaks out above that swing high suggests that this would be a flat. And as you can see, it hit the edge of my target here. And we're now printing a bullish engulfing at the moment after a doji there at the end of the downtrend, right? Notice what's going on here. Candle spreads are getting smaller, right? Volume's dropping off. Though one might argue that, especially in this area here, candle spreads got a lot smaller here than volume dropped off. So again, the idea that more demand is showing up. So you want to see, you know, this would be an A, and this would be a B, and this would be a C. So if you're doing Elliott wave, you want to break out above wave B. It just happens to be the swing high in this case, right there at 3733.75. If we get that, from here, 39.5325 becomes minimum expected target. Look at where that is right here. Makes a lot of sense, right? That gives us a wave 5 up here. Minimum expected again up here. Now, secondary target is going to be this, normally our minimum expected wave 5 target right around 40.35. I think I kind of like that target a little bit better just because it gives us a wave 5 closer to this swing high up here. It would get us closer up here to around that 41.30 area. But, you know, again, those are the targets. I mean, so that's a lot of potential money to be made, right, on that. Now, you have to break out above wave 4. Again, you're going to look, you want to break out impulsively. Now, what's right below wave 4? The daily pivot. So if you get this impulsive breakout above that daily pivot, that's bullish, right? So we came down in between the pivot and the S1, rallied up to the pivot, rejected, new low, but look at that nice candle there, right? So if we can break out impulsively above not just the pivot, but really it's that swing high right there, right? It's that 38.20 area. If we can do that, we should be looking higher up. Right? What we need is USD to stop doing what it's doing. It's going down. Why do we want to stop going down? I know what you mean, Hank. Just messing with you, man. So anyway, so we've got this initial target here at the 50 to 61.8. And so if it does break down below there, then we could potentially see it reaching the 78.6 down here at 35.46.5. Obviously, if we drop down below the swing low here, it's invalidated, and somehow this becomes an ABC or a WXY. So again, as a trader, you look for your validation levels. Your validation, your invalidation levels. Your invalidation level is a swing low. Your validation level is this swing high up here, in this case, because that's wave B, right? So trade, make money. Stop thinking you have to swing for the fences and you got to make home runs all the time, guys. Trade for income. Look to make money. Learn to make profits. Take your profits. This is, you know, one of the top 5 issues that new traders have, or the traders in general have, is that they don't take profits. They always think it's got to continue up higher. Stop doing that. Lock in profits consistently. That's how you become a consistently profitable trader. Not swinging for the fences and hoping it goes and letting it, you know, keep petering out on you, right? All right. Let me see here. I mean, you had the same thing across all the indexes there, right? So NASDAQ Composite, same idea, right? By the way, huge inside bar, or outside bar, I'm sorry. Again, outside bar being you open below the previous candle spread there, close above it. So you take that candle, you're encompassing that candle from the outside, right? If we zoom in there, I don't know, maybe 30 there. There you go. So again, looking at one up and then potentially ABC here down. And let me see here. There we go. Right around the 50%, right near that 60, 61.8 kind of area. But again, we're going to, want to see a breakout above that swing high. If this is an ABC, then breaking out above this swing high here at 10,542.01 will add confidence to the count, right? But with the big movement and the big movement, I personally want to see a breakout above the swing high. And again, if we do that from where we're sitting right here, 11,470.41. Again, look at where this is at. Previous area of resistance and support, right? Secondary target up here to 11,729. By the way, big gap. Gap's kind of open up here too. But I think we should, yeah. This is a daily gap here. And the idea that we would be topped out and leave this gap open doesn't make a whole lot of sense because of what type of gap it is. Now, again, doesn't guarantee that it has to fill it in. Same thing here. But, because they are gaps that are happening during the week, more likely than not. So, I don't think it's entirely irresponsible to think that we'll get a rally up here toward 12,230 or so. We'll see. And it doesn't mean it can't go down further and then come back up. But I think that's something that's still, and up here even, gosh, yeah, here's this one up here at around 12,965 or so. So, yeah. Daily DXY, could you say it's in a broadening wedge going back to May of 22? Or May 22nd? Which one are you talking about, man? I don't know. Let me see here. Daily. But I'm a swing trader, Hank says. Let's see here. You mean this right here? From this point? I don't think so. Would this be your 3 here? Like an ABC you're thinking maybe? And this would be 4, and then ABC is 5 maybe? Yeah. I don't think so. When I zoom in, this looks like... I don't know. When I zoom in, the count seems potentially like I have it here. I mean, again, I could be off. And so you go 1, 2, 3, 4, 5. I mean, it's possible in either case, whether, you're getting that expanding. Well, let me see. I mean, that's a good drop off there. Again, usually with wedges, you want to see that, that rejection, that strong rejection, right? And we've got a pretty good rejection off here. So I can't say it wouldn't be. I can't say it wouldn't be. I think maybe you could get a count in there that does that. Possibly, yeah. Because of this big move here. But, again, what you're looking for the DXY is you want to see an impulsive breakdown below the daily. Big, long story short, that's what you want to see right now. Not a breakout above the top. You want to see an impulsive breakdown below the daily. Pivot. If you can do that, then you want, of course, below the swing low here. And if you can do that, there's a really strongly increased likelihood that the top is probably in. Yeah. Of course, we have these lower peaks here. Not worried about the price action, but just looking at the peaks here with this awesome oscillator. Suggesting we may see it head down further. So yeah, we'll have to see what happens there. I think maybe you could probably get that. But I think in either, whether you look at it that way or even the count I have, which has this, this kind of wave 4 thing here. It's kind of running wave 4 triangle. And then of course 1, 2, 3, 4 ending diagonal for a 5 there. I think there's some possibilities with that. Sure. Yeah, for sure, man. The Real Go-Go, what's up, man? The Real Go-Go 007. This is just caught up on playback. Good day, sir. Good to see you. Keen to start seeing higher highs. Bags are getting filled. I think, we all are. Here's the thing, though, guys. I'm going to be honest with you. Most people, most traders, it's probably most of y'all as well, have not bought yet and probably won't buy, until, at least with Bitcoin here, maybe here, most people will buy up in this area by the breakout. They will be in complete turmoil as this goes up. It was the same thing that we had back here. Maybe y'all didn't buy, a lot of y'all. Remember what you went through as this continued going up and you became more and more unsure because crypto Twitter was so sure. Remember, again, I bring this up not to like brag or whatever, but you guys have to understand, that these are the things that I've said and I explained it as it was happening, right? So again, remember it was that 4,000 area and crypto Twitter was so loud about how it had to go back down. And so if you're a trader, if you're a new trader and you're not really sure about what's going on and you're already emotionally drained and nervous because you had this big move down, right? And you're already, worried that it's going to go down further. And then everybody on crypto Twitter is swearing, and screaming that it's got to get rejected at 4. You didn't buy, right? You're unsure. Negative social mood, right? And then here we rally up to 6,000, right? And again, crypto Twitter even louder than what they were at 4, louder at 6. Oh yeah, and and then all the explanations of why. It was so strong support for so long, and then it broke down. So you're gonna get rejected by everybody that shorted there. And my interpretation was no. The people that were buying here allowed the breakdown here, right? And so because they did that, and then they filled more down here, right? They're going to allow this to just shoot right up through it. And, of course, that's what happened. Remember, again, guys, the term I used was like a hot knife through butter. This is what we got, right? Again, a lot of traders could have bought in here, but they were scared. They were too unsure because crypto Twitter, everybody else was so loud about why it had to go down, right? Our target range up here, right? Remember we released that for everybody publicly? Over in my Discord, the free side of our Discord is still there. If you want to go join the Discord and scroll through the announcements section up around June, you'll see it there. And it was everybody was buying in at this point, right? Because everybody got excited here finally, right? And then of course got rejected. And so, it's quite possible. That you could be seeing the same kind of thing coming in here, right? Again, potential Adam, Eve, double bottom, right? But you definitely want to see this impulsive breakout above that daily pivot area here. And the swing, not even just the daily pivot, it's a swing high up right there above it. What is that? 24.79. What is this one? Yeah, 24.79 here. You want to see a breakout through that. And again, breaking out through this swing high up here, if we get that 25,214.5, that suggests, especially if it happens impulsively, that adds more confidence to the idea this is a double bottom, and that gives you that target up there around that 35,620 area here on Coinbase, right? There is a bit of similarity here if we look. Between here and here, right? Again, almost a double bottom right here as well. And it was that breakout above that reactionary high there. It was leading into that where volume kind of picked up, right? It was that breakout there that volume picked up. Now here, the movement down into the structure is a bit different. So again, you see that volume drop off as you get in there, right? And then you see volume kind of pick up as it bases here. And you see volume picking up, but it's not going down lower. It's printing higher lows, right? Other than you get this this slight little dip below the support here caught traders offsides, right? So again, as I mentioned earlier, it doesn't guarantee that price has to go up. But man, when you're looking at that, you should be paying attention. You should be. You shouldn't immediately discard it as not going to rally, right? You have to keep an open mind about it. Because otherwise, you're stuck over here like you were last time, right? You didn't get in at the low here. You didn't get in on that check of that low, right? You didn't get in on the breakout of 4. You didn't get in the breakout of 6, right? You finally got in up here. You don't want to do that again if you did that last time. This one was probably a bit scarier because it was moving so quick. But nonetheless, and then you had, look at this right here. Look at the volume on this. So again, volume price action. Huge candle spread here, right? And huge spike of volume. Slightly more volume, right? A bit more volume. Completely flipped the script, right? Supply definitely in charge. Demand in charge, right? Not only that, but you came back and retested into the wick here on lower supply, on lower volume. I mean, you should have been going long on a breakout above that swing high there with a stop loss right here. Minimum, right? Because you went up and you checked higher low, lower volume, another long wick. I mean, that is what we talk about when we talk about higher confidence setup. And you could have done that to at least here, at least to this point right here. That's a pretty good bit of money. Here to here, right? So as a trader, guys, it's about being open to what's going on and not being so stuck on what you think must absolutely happen. Because most of the time, what you think must absolutely happen rarely happens. And it doesn't matter how long, how much experience you have in the market. Again, as part of my talk that I gave at Web3 Expo there, I talked about how there's herding. Everybody herds, right? Even your big money managers, they herd, right? And just people herd at different levels. The newer you are, the earlier you're gonna, the earlier in that in the cycle, in the area you may herd, right? You may do things that you shouldn't do earlier. But even like I said, even the big money managers, they herd. You can see it in how much money, what they're doing with their money when they're doing it. You'll see, right? So the goal, guys, is not to herd. The goal is to understand that the herding mentality is there, and that's what usually happens, and then to look for it. All right? Didn't you long the 14,000? Me? What's going on, Canes? Why would I have longed the 14,000 top? I'm the guy that put the target in there. That doesn't make sense. Anyway. So yeah. So we'll look for this breakout here. Right now, we're doing right here, 19,856.57. That breakout. But anyway, we are 12:32. So as always, remember the only thing you control in the market is how much you lose. So please keep working on that risk management. And man, you guys just trade safe. And I'll be back on Tuesday, 11 a.m. Central Standard Time. And we'll get back together and see how Bitcoin does this weekend, right? And risk assets through the rest of today and into when next week opens up. As long as the dollar continues going down, you should be looking for some further upside. So we'll see if we can get that, all right? Appreciate you guys checking in as always. And I will see y'all there on Tuesday, right? If you're in Discord, I'll see you guys over there. Tier 3, we'll do price action make up there at 3 o'clock Central Standard Time. It's about 3.5 hours from now. So y'all take care, trade safe, and I will see y'all next time.